The White House is moving forward with plans to limit Chinese tech investments, but in a less confrontational manner than previously reported. The president is looking to Congress to strengthen the Committee on Foreign Investment, also known as CFIUS, to keep companies from stealing U.S. intellectual property. Treasury Secretary Steven Mnuchin hailed the move when talking to reporters on Wednesday.
The economic team recommended to the president, when this legislation passes, we will have the necessary tools to protect technology, whether that's China or anybody else.
On Monday, Bloomberg reported that Mnuchin and the Treasury Department were set to use a rarely used emergency law that would limit Chinese investments on the basis of national security, something that is no longer the case. To discuss this new plan, we've got Bloomberg's Shelley Banjo in New York, a senior reporter who covers the Chinese tech scene. And with us from Beijing, Ben Harburg, managing partner at MSA Capital, a venture fund that has invested over $1 billion in the last 3 years. So, Shelley, I'll start with you. What happens now?
What happens now is that Donald Trump is going to rely on Congress and the legislation that's going through right now to strengthen the laws that already exist with CFIUS. So what we're going to see is CFIUS be strengthened. It's an already kind of a untransparent, pretty interesting kind of group of folks that are managing and kind of looking at each individual investment coming in through China, and what they want to do is strengthen that even more. So that means taking a look at things like joint ventures, which used to be something that kind of flew under the radar, and smaller deals that used to kind of fly under the radar. And this idea that we're not just going to look at the big deals, but also some of the smaller deals coming out of China, trying to buy up U.S. tech companies.
Ben, as someone who's investing in China and U.S. technology, how does this impact your strategy?
Thanks. Yeah, we looked at this as a boon locally, frankly. We thought that this type of aggressive action actually led to greater drives of self-sufficiency locally. A lot of emphasis placed in the last couple of weeks amongst government, regulators, universities, venture capital firms to start to breed a new crop of deep tech businesses here to replace the U.S. components that might have been taken out of the market. I think this action and things like the ZTE sanctions open people's eyes to how empty a lot of the businesses here when it comes to core tech. And so it really spurred a deep soul searching within the venture and entrepreneurial community here, and led to a push over the last few months towards businesses really being developed, a lot of capital pouring into new areas where we believe we can develop self-sufficiency locally. So not an unexpected move here, but one that I think has started a process where you'll see even more innovation and development in hard tech and deep tech here in China.
What's been the reaction there from people in Beijing as these dramatic developments have played out, gone back and forth, the tit for tat?
It's been it's been a bit of a roller coaster. As an American here, I'm often referred to and questioned what the true meaning of all the measures is, and what really is going to stick to the wall and what is not. I think that the overall view here is that Trump is a businessman. He understands the impact that these types of measures would have both on U.S. businesses as well as the shareholders there. Likewise, many of the Chinese businesses are obviously backed by venture capital firms, much of that money coming from U.S. investors as well. And so the view here was that while a lot of these what we call extreme pressure measures were being used, ultimately a way would be found so that a lot of the impacts of these statements would be mitigated, and so ultimately not huge damage done to local businesses.
We are, of course, already hearing from lawmakers. Take a listen to Senator John Thune, who is on the Senate Finance Committee.
I think that this is a better course of action, and they indicated that they're going to use a legislative approach as opposed to what they were talking about previously, and I think that makes more sense. And if you look at the concerns that we've had about potential retaliation from China with respect to what the administration had been proposing, I think this is sort of walking back from that a little bit, and to me represents a more thoughtful, logical approach.
Shelley, what exactly are we expecting in terms of legislation to come out of Congress?
Well, we're expecting this kind of souped up CFIUS bill and legislation, and it's going to mean more. It's going to be basically more scrutiny, more staffing involved at CFIUS, more scrutiny over the companies that are, engaging in these deals. And we've already seen the impact. So we've already seen deal flow in China from Chinese companies and acquirers into the U.S. go down. We've seen some venture capitalists pull back, Chinese venture capitalists pull back a little bit. And the idea is that maybe that's going to happen more if the U.S. increases the scrutiny. But to Ben's earlier point, there's nothing like telling someone you can't do something to kind of rev them up to do more. And so if you're going to tell Chinese companies, like, you can't invest in our businesses, you can bet that's going to rev some of these entrepreneurs up to say, you know what, maybe we don't need to invest in U.S. startups. Maybe we need to double down and create our own technology. And so, it's going to be interesting to see what happens next. Is this stick going to actually end up spurring even more tech and more innovation in China than what people were expecting in the first place?
Well, and we've already seen Chinese IPOs not performing perhaps as well as expected. Take a look at my Bloomberg here, and this chart showing recent HK-listed IPOs. We do have Xiaomi coming up, and Ben, you were an early investor in Xiaomi, and I understand the founder of Xiaomi is an investor in one of your funds. Any concerns about how Xiaomi will perform, given now that we know some of the financials, which aren't perfect?
Yeah, it's not an easy time to come out right now. As you mentioned, a number of underperformers in Hong Kong, new regulations around CDRs in China, and that option being taken off the table for mainland investors, certainly frustrating many. And so not an easy time to come out. And that's certainly complicated by the fact that Xiaomi are a new species. They're a company that don't fit any of the usual metrics and valuation methodologies, and certainly company profiles that most in the public markets understand. It's a hardware company. It's a software company. We do IoT, e-commerce of services. So it's difficult to put one finger on it. And the net result is that I think a lot of people are scratching their heads today, both institutional as well as individual investors, trying to figure out how really it should be valued.
And what about another potential big one coming up, Meituan? What are your thoughts on that?
Sure. Yeah, it's another one of our companies, and one that we've been very bullish on for quite some time. A little bit more understandable to Americans, or at least global investors, on the basis that it's very much an aggregation of a lot of the services that we already know, a kind of Amazon of e-commerce services. So your food bookings, your kind of ride hailing, tickets for shows, flights. The numbers still really powerful there, the types of numbers that they've generated. They've gone up more than 700% over the last 3 years in terms of revenue, while halving their losses. So I think that company is well positioned for an IPO still to come out, a little bit more understandable, and with a lot of momentum around that business that maybe Xiaomi is starting to feel a little bit less of.